Hi, everybody. It's Chris Englebert with Englebert Financial Advisers in Allentown, Pennsylvania. And guess what? It's the 1st of February. It's the first of the month update. And what we're going to talk about is what happened in January and what we think is going to happen going forward. So what's on everybody's mind right now? Obviously, if you've been under a rock and you're not paying attention, we literally have two wars going on right now, along with, lo and behold, an election year. We've seen some of the primaries in some of the states so far, elections and the war in Ukraine. And obviously what's going on in the Middle East is all over the news. How is that affecting investors? Well, guess what? The S&P 500 in January dipped briefly, but then turned around and took off to make new all-time highs in the month of January. So the month of January actually finished up for the month. Now, when you watch this video, we will be in prime earnings season, especially for the big tech stocks. And one of the things that we are concerned about is that the tech stocks are priced to perfection. And when you see this video, we'll have already had Microsoft and Google earnings. Google earnings were great, but not that great. So again, we are more concerned about the first quarter and the impact of earnings that they're going to have on the tech stocks. So again, I've updated this chart last month, and I talked about how growth was the place to be in 2023. It definitely was not the place to be in 2022, but so far growth keeps powering ahead. The Vanguard Growth Index is up about 4% for the year, while the Value Index is up about 1.5% for the year. But wait, one of the things that a lot of people have not been paying attention to is that banking stocks have had a huge surge since the low in October. We think that bodes well for the overall health of the market. But again, one of the things that we're trying to have investors realize is that after a strong October, November, December, and now January, it would not be unusual to see some type of pullback over the next 2 months. What's happening as far as interest rates go? Well, interest rates bottomed off of this huge drop in yields since October, which fueled the stock market's rally. But you can see that interest rates have floated up again. And we actually think that's a buying opportunity with the 10-year Treasury getting around 4.25%. Now, one of the things that's also happened by the time you've watched this video is that the Federal Reserve has had their meeting, and they've expressed the fact that they are not going to be lowering interest rates anytime soon. Everybody thought there was about a 75% chance that they were going to lower interest rates at their March meeting. Now that chance is down to about 25%. And for the May meeting, it's down to 50%. We actually think that the Fed is going to keep short-term interest rates higher for longer because they're worried that if they lower short-term interest rates, that could reignite some inflation that's still out there. So we showed this last month, and I want to bring it up again because the Wall Street forecasts are all over the place out there. You have Ed Yardeni, who I greatly respect, thinks that the S&P 500 is going to be up over 13% for the year, while you have JP Morgan that thinks the S&P 500 is going to be down about 12% for the year. Again, they're basing this on earnings forecasts and whether or not we're going into a recession. I don't know if you remember, but last month I told you about my 5-5-5-5 outlook for the year. I think the S&P does 5%. I think bonds do 5%. I think commodities do 5% for the year. And lo and behold, right now, money market funds are paying 5%. So our indicators, our risk indicators are elevated right now, and you are getting paid to sit in cash and wait to see what happens. So to kind of sum it up, growth stocks continued where they left off in the fourth quarter with strong gains for January, but we are expressing worries going into earnings season. Many of these big tech stocks are priced to perfection, and the whole AI trade and boom has really made them even more expensive. One of the other things that people don't realize is that Chinese stocks have been in a free fall, and many Chinese investors have moved their money into Japanese stocks and U.S. tech stocks. And again, we think that's some of the overvaluation that's going on in that particular area. We did see the 10-year Treasury float higher. We believe it's a good time to buy longer-term bonds, especially tax-free bonds. And again, our risk indicators are flashing yellow right now. So does that mean you sell everything as far as the stock market goes? Absolutely not. We are holding positions. We did trim some at the end of December, but we are going to be slow to put cash to work right now, because we think that the months of February and March could be a little bit more challenging than what they've been the last couple of months. So that's the first of the month update. Again, you can always get this update by downloading my app by texting Chris E, C-H-R-I-S-E, to 36260. You'll download my app. We post all the videos and our monthly slide decks on the app as well. That's all we have for the first of the month update. We'll be back next month for the first of the month update in March. We'll talk to you soon.